Hey there, welcome to the StockOptionAssassin.com weekly market wrap. This is the week ending March 16th, 2012. Today is Friday, and we still have about an hour, 20 minutes left to the bell, but I wanted to go ahead and get this video done. Obviously anything can happen in the last hour or so of the day and actually of the week, but I wanted to kind of recap what had happened, and I'm looking at the SPY right now, and you can see I have a yellow 20-day moving average. The 50 and the 200 is down here. And this line that goes across, horizontal line, is the 2011 highs, which is 137.18. So we'll, 137.20. And the past couple of weeks, the SPY's kind of wrestled with this level, and you can see that we had closed above it, and then we closed back down. We closed above it, kind of closed down, and then we had our little pullback. And then last Friday, we closed above it. And basically what I was looking for is some sort of confirmation where whichever candle that closes above this level, you need to close above that high. And we got that on Tuesday of this week, and got a little gap jump here. And this kind of just rocketed on Tuesday. This was after the FOMC meeting. And then since then, you've kind of just, you kind of been consolidating up here, but it's starting to look slightly rounded. And, I'll be the first one to say I'm in the bearish camp, and I've gotten my hand slapped on some shorts. But now that we've confirmed, you can't argue with the trend. And now that we've confirmed, what I am looking for is still sort of a pullback before I add any significant long positions. And, it's possible we get this pullback next week. And the reason why I'm thinking it might be next week is because a couple things. You're down slightly on the day right now. I'm down about 0.25%. But what's interesting, I'm going to bring up the UUP, the dollar chart. Look at this candle on the dollar today. This thing opened higher, gapped up really from yesterday's close, and then just fell. And we're right into the 50 moving average, actually looking like, depending on how the next hour goes, you might even close below the 50 moving average. Now, this is a pretty bearish looking candle. This one candle has sort of negated, the past week and a half. And you may just be looking for a little gap fill in here, but I don't really look at gaps too much with the dollar, especially the UUP. But you may just be kind of reverting back here. You may end up touching this 20-day moving average, but I still think the dollar, since the dollar this week had technically made a new high, we might be making a lower low. So I'm bullish on the dollar for now, unless the government intervenes, and then all that's off the table. But if this is if the dollar finds support in here, and this makes a higher low, then I would look for the dollar to move up and the market to go down. So the fact that the dollar made this huge reversal and is down 0.67%, and the market itself, the SPY, is actually down too. I think the correlations will kick back in, and if the dollar does rally for a few days and we get a nice little pullback into the 20-day on the SPY, I would definitely look at picking up some longs on a pullback. So I'm really being patient here, and I've been talking to our market timing service members about this all week. Another thing I've been talking to our members about, we were looking at bonds a little this week, and I'm going to use the TLT for this, and you can see that basically bonds pretty much fell off a cliff. And really, this started on Tuesday, the same day we had that large spike in the spiders. But we fell down. We actually closed below the 200, and finding a little support at this area. And this is really interesting, because if we do get a bounce in these bonds, TLT, obviously this is kind of looking bearish, but a bounce up to this 115 level and then a rollover would not be a bullish chart. It would still kind of mean that the bonds might be going lower. But intermediate, the near term, if we do get this bounce, this might coincide with that market pullback I'm talking about, and then and also a dollar bounce too. So these correlations kind of been off a little bit, but I'm expecting them to sort of kick back in, and I guess we're gonna have to wait till next week for that. But you do see that bonds are finding a little bit of a bid here around call it a 111. Not really up on the day, but pretty much flat on the day. But the fact that the market's down and this is flat may be a little sign that we might get a little bounce. And maybe it's just the first few days of the week. Maybe we can pick up some longs next week. two swing trades I'm looking at, and I did not pull the trigger on them today. I definitely wanted to wait. One of them was Disney, and Disney just has a great chart. This horizontal line across the top, this is the 52-week high. We pretty much tagged that, and we're consolidating. And I really like this large surge above, break above this high, and then these kind of inside candles. I really think that this is a nice bullish chart. What I would probably look at is if we do get some sort of pullback in the week, early next week, I would definitely take an entry down here. And here I'm using a 13. This purple line's the 13-day exponential moving average, which with the average true range bands outside of that. So you can see, we're consolidating here. We surged above the band, consolidating. If we do get a sort of minor pullback on Monday, Tuesday, and this thing kind of holds, I would be looking to pick up some April calls in Disney. And if we just quickly look at the option chain, what I would probably be interested in is either the 42s, maybe the 41s, 41, 42 calls for April for Disney. So let's see how Monday and Tuesday goes. If the market does pull back a few points and this thing kind of stays still, I would probably get in around here. And again, these are going for, you can get in 175 or 255 for those calls. And then what I would also look at is, if for some reason the market pulls back more, what you can do is, since April we have enough time, you can pull back. If we do pull back and say we retest this low at this level, which is coincide with the lower band, you could you could pick up some more calls of the same strike, maybe twice as many, and look for a reversion to the mean or even a breakout. So that's how I'm looking to play Disney. But I do want to see how Monday and Tuesday goes. If for some reason Monday is a huge rally, then we just miss the trade and look for something else. The other one I'm looking at is Oracle. This is a little bit riskier trade. I do like the chart. Earnings is coming out Tuesday. I think it's, let's see, after the bell Tuesday. I still like the chart. I like the fact that Oracle has kind of gotten above this previous support and is now, or excuse me, previous resistance, and now it's kind of, you can view that as support. This is around the 28, 29 level. And again, it's holding the 13-day moving average, kind of getting a little, you can call it a bull flag here. But there's a couple other things I like about this and with Oracle. I'm going to bring the moving averages back on. We have been consolidating above the 200-day moving average here. You can see we did have a down day where we touched the 20-day, but we never confirmed below. So it looks like today we may close depending on how the next hour goes, but we're still above the 20. So the fact that you have this rising 20 into the 200 as well as a rising 50 that will eventually hit the 200, I'm liking this as a long play. A couple other things here. I'm going to switch to the weekly chart on this, and let me just clear the studies real quick so we can get some of this stuff off of here. Let's just delete some of these drawings. So the other thing you had was, if I take my Fibonacci tool and we kind of had this move here. Oh, wrong tool. Retracements. There we go. We had this move here, and then we kind of pulled back, and you can see that we finally got to close above, and we touched the 27 extension of this leg up, and then we pulled back. We found support right at where this breakout level was. Again, this is 29.25. And so, this is another reason I'm kind of liking the chart. I would have liked to get in down here, but obviously, if we get in a little 50 cents higher, it won't be an end of the world. But if we can, consolidate here and earnings is a good catalyst, I think that we get to the 618 extension, which would kind of coincide with these highs. And one more thing I want to point out here on the Oracle chart is if I take a trend line, let me pull this off again. If I take a trend line and sort of go up to this move, and then I simply duplicate this, and we pull back to this level, right? So we had this leg, we sort of pulled back, and this, if we have a one-to-one symmetrical move, this would also put us around these highs, around the 32, maybe 32 and a quarter level. So again, when you look at that with the Fibonacci extensions, you can see this is pretty close. So this would be my target on an earnings move. But you got to remember earnings, you never know what's going to happen. It's definitely a high risk play. I would still probably go with, the options are not that expensive on Oracle. I would still probably go with something slightly in the money. And I would probably look at I wouldn't do, I'm not a big fan of weeklies for this one, but I would probably look at the April 28 calls, possibly the 27 calls. But again, this is a high risk earnings play. So you have to consider that if this thing tanks, you're going to be in trouble on the options. So I hope you guys have a great weekend. If you guys have any questions, let us know. And thanks for watching.